Dear friends, today I have taken up the topic of analyzing the Tata Technology share price declining reasons. Let's not wait and do away with the detailing here. Before going ahead, this is a disclaimer. I'm not a SEBI registered analyst. All posts are for educational purposes, non-advisory, discretional. No claims rights reserved. I am not responsible for your profit or losses. Please consult your financial advisor before investing. So Tata Technologies in these days is almost down by 57% from the IPO opening price. There are several reasons which we will study further why it is getting declined, even though it is a very good techno uh, techno firm. And then we will see through techno funda analysis what is a way forward for such good companies and how we can track it out. So here in front of you is a summary of the key drivers. So financial under performance is observed for this firm, and we'll see in further presentations how this has impacted its top line, that is the profit. So top line profit, net profit is getting declined over a quarter on quarter basis. And sector headwinds are few of the conditions which is not allowing this company to have a larger amount of growth. This includes R&D spending and especially the EV transitions and project wind downs. So there are few of the projects which are getting closed for this company in recent past, like Windfast EV. So that has also dipped the revenue so far. Elevated valuations. The stock was listed at an around of 500 rupees price, but it was opened up at more than 100,000 rupees price. So it is being evaluated at high valuation, and so the fact is remains same that the Tata Technology prices are getting declined. The client concentration. The Tata Technology prices are morely dependent on few of the clients like TMN and JLR, which is increasing the overall risk profile for the company. We'll see further the financial underperformance detailing over the next presentation. In front of you, this is disappointing financial results for quarter on quarter financial 26 with the previous year quarter financial results. Where you can see the net profit was financial quarter 2 was 165.5, whereas for it has been declined by 2.8% sequential decline. Then the stringent revenue growth, the growth of factor which are not so much in the incremental facts, but then you can see in front of you that the quarter on quarter growth is getting stagnated with a period of financial year 21, 22, 23, and so forth for 24 and 25. There is margin contraction in terms of overall revenue versus the profit, where in financial 24 the profit margins were 6.79 in INR billion INR, whereas in financial 25 it is 6.77. It is almost getting degraded on quarter basis from 18.2% to 16%. Then uh, we weekend matrices, that net profit margin has been declined, that what we can see from 6.79 on quarter basis towards 6.67 for financial 24-25. So this is a 13.3% declination in the overall financial profits for this company. That has also lead to the declination of the price movement in the downward direction. It is major reason why where the investors are not willing to give away for the stock price movements. Then there are different industrial conditions and valuations which is not allowing this company right now to be in the good trajectory. Sector headwinds and valuation. As you can see, the automotive sector challenges are there in current scenario, where global auto industry faces very slowdown EV adaptation and cost cutting by OEMs, and which is directly impacting the R&D spending for this company. The project wind down. There is a project which is recently closed for this company of VinFast EV project, significantly impact the revenue visibility. Then elevated price to book ratio. The stock traded at an expensive price to book ratio of over 7.4 compared to its historical averages, which limits the upside potential for this the stock. Analyst outlook is market sentiment is generally cautious or on the sell side due to the flat financial trend, and bearish technical signals are being observed over here. As you can see, the peer comparison with reference to such different companies alongside the Tata Technologies, where we can see the good ROC, though as the top line is decreasing in terms of quarter on quarter basis, it is not allowing the price movement on the higher side. But there is a light ahead of the tunnel which will allow this company to move further when such technology stocks will be flying or flourishing. Overall, the Nifty IT index is showing declination in last 6 8 months. That's where the major dent is, along with other companies so far as the price and the PE ratio, PB ratio, and ROC is concerned. It is having high PE ratio, and the valuation is are very high with reference to book value, and which is not allowing the price movement on the upward direction for these companies. So far as the revenue split and growth drivers are concerned, the business segment has been divided in two sections of technology solutions, and the other one is the services, where the major revenue comes from the services area, where again the services is getting segmented into automotive services and aerospace and IHM services. Automotive services are more or less dependent on the auto divisions of the company, and largely on major two companies of Tata Range Rover. Now it has been Land Rover has been taken over by the Tata companies, and also the remaining IHM business, aerospace business, which is more or less contributing towards the 19% of the overall service segmentation. Here, the growth slowdown has been observed because of the impressive. While the company delivered impressive growth, the recent slowdown in non-auto sector has been a concern here, and this is the major contributor as the concentrated services are limited to few of the companies. The key takeaway is the share price decline is driven by combination of internal financial weaknesses and external industrial pressures. What can be the path forward for this company? The recovery is dependent on successful client diversification, margin improvement, and the clear outlook for global automotive R&D spending. Now we will see the price action chart on the trading view platform for this company, and what is an outlook on the technical front. Then we will see the fundamental valuations on different platform for this company. As we can see from the chart that the Tata Technologies was listed way back in 2023 December November period, on 20th of November 2023. The opening price was 1400, whereas the listing price was around 500, which was a whooping opening up. But then, since the day of opening, it went on the downward journey. Currently, it is almost 57-58% down from the highest valuation. It has never seen that high mark taken off by this company. In recent case scenario, this is a weekly chart where we can see there is a major resistance available between 700 between 710 and 730 valuation, which is not allowing the stock to move up. Though in recent scenario we can see certain base formation for this company. Only this can be reviewed after this high and resistance line is broken out. It is coming down to be around 720 to 730 level, upon which we can review this chart for further consideration on the technical front. So far as the technicals are concerned, there is nothing very good about this company. Now coming down to uh, the techno funda analysis or technical. After technical analysis, let's see the fundamental analysis of this company. The major revenue is coming from two areas. One is the services, one is the R&D. The services is almost 78-79% of this company, and the as far as the valuation is concerned, it is almost having face value of 2 with a ROCE of 19.9%, whereas the sectoral stock P is of 38.4%, having the market cap of almost 26.615 uh, 26,615 crores rupees. Here, what we can see as a part of price to book value is on the higher side, that is of 7.46 rupees. And operational profit margins are very good, but then the overall growth on the front of revenue, as you can see from the comparative quarterly results. On the September end, the revenue was 1296, whereas in 25 September it is 1323. That is again having a marginal growth in the sales, but on the operational profit it is in the declining state. As you can see, the operational profit is 236 over here in September 24, whereas it is for September 25 is 208, and the profit margin are reduced from 18%, of OPM are reduced from 18 to 16%. And that is a main factor here, that there is no sales growth or the top line business which is allowing this company to move ahead. The major reasons already we discussed during the presentation on the slides. The other factor that we need to see, the sales for year on year is now getting stagnated. Till the time the stock was listing on the stock exchange on the during the December 23, November 23 IPO reason around, the overall revenue growth or sales growth was uh, commendable, where it grew from 2942 levels to 4414 level during the March 23 ending year. But as you can see, from March 23 onwards, 5,000, almost 5,000 crore revenue sales is getting depicted, and it is very stagnant till month till date scenario even. But we are hoping for some of the last quarter up movement over here in the revenue part, because there is one still 2 quarter detailing are available, yet to be available for this stock. Having all said that, the operational profit margin were on the incremental state from March 2019 till 2023, where we can see the incremental growth from 17% almost to the 19%. Now, it has been more or less stagnant between March 24 and 25, and now month till date the figure are not meeting with the previous year's scenario, which is again showing the declination. These are the major factors where the top lines are not moving because of global factors and the company factors, which is not allowing this price of this stock to move on the upward direction. Though we can see here that the overall cash flow has been increased on the positive front for the March 25, and the shareholding pattern is remain intact over here, where more or less the public holding is stagnant, though the scenario is not so lucrative for this stock. So final verdict for this stock is sideways or downward fall intact unless and until top line are increasing, and the revenue and the profit margins are increasing in the upward direction. There are factors which the company has to see on the front of the centralized customers to the diversification of the customer base. This will also being seen as on the technical chart we see that there is a 730 level which is supposed to be taken out, so that we can review this chart once again. Thank you for watching the video. If you find this video helpful, please press the like button, please subscribe to the channel, and uh, take care, stay healthy, and take invested, and stay tuned for this more such stuff on this channel. Thank you for joining. Now we will study the Tata Technology Limited on the technical front. As we can see, during the November 2023, when the IP was listed, it was uh, made live in the market at a level of 1400. After which it has never been to that level. Until that, it is under the falling scenario, and the current price is around 655, 656, whereas the lowest point is 597. It is from the highest to lowest almost 57, 58% reduction to the valuation. Please note here that the valuation on the listing day, the listing day price was supposed to be 500, but it opened up at a level of 1400. So that is one of the major factors, that the high valuation which is being reported or depicted by the investor is not being supported by the revenue and the profit margins of this share. On the technical front, one should also note that the valuation of current scenario is 655. Unless and until this 730 to 740 level is broken out, which is also a long-term resistance line, we will not review this chart for further considerations. And having a face value of 2 rupees with a price to book value of 7.46, which is on the higher side. Though the operational profit margins are good, but they are stagnated or somewhat reducing in the trend with reference to the revenue which is getting generated by the company. Further, we can see on the front of the quarterly results, where we can observe here that the sales with reference to the previous year September month, it was 1296, as compared to the 25 September 25th September, it is 1323 valuation. But as you can see, the quarterly operating profit is declined from 236 value to 208 for same quarter on 2024 and 25. Here the point here to note is that OPM has been reduced from 18% to 16%, and it is in the constant declining state with reference to the previous year on year quarter basis. This is not only one of the factors, but as you can see that the profit margins on the front of sales has been reduced. When the IP was listed in March 23, the sales were whooping from say March 2019. The level of sales were 2942, where in the March 23 the valuation of sales was 4414, which was almost very good improvement in the sales, and so as the operational profit margins were improving. And thereafter in 23 to 24, there was a marginal increment in the sales of this company, and so as the margin of profit, as the operation profit margin were intact, showing the incremental value. From March 24 onwards till date, the sales are stagnated, and so as the profit margins. In fact, for the current year till date scenario, the profit margins, operation profit margins are somewhat declined with reference to the 23 valuation where it was listed. And so from the listing point of from the listing day, it has never been to the level of the listing valuation. This is another aspect to see in front of the Tata Technologies. Here we can see the equity capital was increased from 42 to 81 during the March 23, where the IPO came up in the market. Overall total assets were are showing the incremental facts, and also the consolidated uh, consolidated cash flow is increased on year basis from 2023. The only thing is to worry about is the top revenue and the profit margins. Even debtor days are also improving in terms of days, and also the shareholding patterns are intact for such a huge amount of company, and so-called as the revenue model. So overall the overall the fundamental points are very good, but it is in the declining trend with reference to the previous years. Here, the final takeaway for this company would be the share price declination is because of the combination of internal financial weaknesses and external industrial pressures. The path ahead for this company would be to see the level of 733 are taken out for the same, and on the technical front, and on the fundamental front, quarter on quarter sales and profit margin are supposed to get increased. Thank you for watching this video. If you like this video, please subscribe the channel and also press the like button. It will improve our enthusiasm and to make out such more videos. Stay tuned, stay healthy, stay wealthy, stay happy. Thank you for watching this video.